The market had yet another explosive year of returns in 2024. And I'll go into more detail about that in my investing plans for 2025 in next week's video. But in this one, oh man, it was a crazy year for the portfolio. We went from 1.19 million to 1.56 million in 2024 alone. It's funny because of all the ups and downs and doom and gloom we hear about in the news all year, every year. Add on that it was my first year without the large paycheck coming in, and it felt like the perfect storm for everything to unravel. But instead, the market was like, nah, it's all good, buddy. Here's $370,000 of portfolio value. We just never know what's going to happen with this stuff year to year. But we do know that playing the game early and often will make us wealthy over the long run. In this monthly portfolio update, we'll get into the value by holding, all new transactions from December, the dividends received in December, oh baby, a HODL factory update. Oh, it's been up and down in that one. But I can't wait to tell you about the new analytics tool that I use to track it. And a zoomed out recap of 2024. And if you're new to the channel, welcome. My name is Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please bicycle kick that like button, subscribe if you haven't already, and drop me a comment down below with anything that comes to mind. We have 2 new channel members for our Sunday shoutouts. A huge shout out to Vinay and Rosa. And with the holiday schedule being a little hectic, I have recorded these videos in an interesting order. So Rosa, you'll get a shout out in the next video as well. I guess you get a double dip. But thank you to both of you and to all of you that have been here all along. It was an awesome first year on YouTube. I had a blast and I really appreciate the extra level of support. You know what time it is. Let's grow. Year-end insights. This is the part of the video where we usually bang on that drum of building quality investing systems, sticking to them in all markets, good and bad times, and staying to the target allocations to buy the dip. Now, please, by all means, keep doing those things. But today I have a different bone to pick. I've noticed that some YouTube finance experts commonly misinterpret how CAGR, or compound annual growth rate, works. This mistake is common around this time of year because we have a full new year of data to throw into our 1, 3, and 10-year total return look-back periods for all of our new shiny forecasts. Now, before I get into the correct way to utilize CAGR, let me address the other elephant in the room. Forecasts are rarely spot on no matter how many great inputs we have. Things simply happen that are outside of our control and they can blow up the model. I use simplified versions that update in real time for my situation. I'll explain that in more detail when we cover my portfolio tracking spreadsheet, but for now, let's get back to the CAGR. You cannot compute compound annual growth rates by simply dividing the total returns by the number of years. For example, VU, or the ETF for the S&P 500, has a total return of 245% over the last 10 years. Now, while that's incredible, it is not an annual growth rate of 24.5%. I would destroy Warren Buffett's returns if it worked like that for me. Let me show you the right way to calculate your CAGR by using total returns over a certain duration from the past. I threw together a quick spreadsheet with a few scenarios of total returns over a certain amount of years. So this is how many years you've been invested. This is the total return during that time. And then this is the bad CAGR calculation that I see so many channels out there. You know, the S&P is up 100% over the last 5 years. So that's 20% a year. For example, when you have 3 years invested, if you have a total return of 30%, they would tell you that is 10% per year. That's incorrect because remember, with compound annual growth rate, your interest that you make each and every year earns interest in future years. And it gets more extreme the longer it's in there. And that's what I showed here. So really, instead of a 10% CAGR, if you have 30% returns in 3 years, you had a 9.1% CAGR. You know, they're pretty close because your interest hasn't had many years to earn interest. The same scenario, 50% returns over 5 years, you know, that 10 per year, quote unquote. So the bad CAGR would be be 10% again. Now the actual real CAGR, when you do the rate of return, so you have to consider present and future values to get an internal rate of return. Now your return is 8.4% per year. But on this one, over 10 years, and this has really happened, VU has gone up 245%. That's incredible, right? That's great, but it's not 24.5%, the total return divided by 10. It is 13.2% CAGR over those 10 years. And then I just wanted to show kind of a funny one, but real. You know, a lot of times you'll see Buffett's gone up some absurd percentage over a lot of years. And well, his is very impressive with a very high CAGR, mind you. I just wanted to show the wrong way can really get out of control quickly. So if you had 10,500% returns over 50 years, that would be a whopping 210% annual returns. But in reality, it's a mere 9.8% with lots of years for your interest to pile up. And for the actual formulas, you can look up, there's different ways to calculate this. That's not really the point of this. I just want to let people know we need to be careful. And there's online calculators as well that you can use to find the real CAGRs. If the inputs that you have are the total return over a set amount of years, just be wary that this math can be deceptive. Enough with the nerdy stuff. Let's get into more nerdy stuff. Portfolio overview. We're going to dive into all the normal monthly portfolio data. We'll also zoom out a little bit to see the results for 2024 as a whole. We're going to start out on my favorite online broker where I hold the majority of our net worth, and that's E-Trade. And one of the reasons I love E-Trade is how clean the interface is. And as you can see here, I have all brokerage and bank accounts selected, so this is the whole 9 yards. One of my core holdings is SCHD, which is right here on top when we're sorted by value. And we have 14,589. I can't believe I made that an odd number. Carrying an unrealized gain of 41.5K. But as we know, the divvies add up a lot too. This is just the price appreciation. And our average cost is $24.60 per share. And then VGT, my favorite ETF for many, many years now. And I'm a little biased. I have 500 shares at an average cost of $246.50. Good for gains of, darn it, I'm still below 200. 193.2K on just the price, of course. Total gain, just to be clear, is your unrealized gain. This does not include dividends over time. $316,450. A nice clean 0-0 after it, unlike this one. That's my bad, squad. And then we're pretty heavy in cash right now at 136,000 plus this 10,800s in the premium savings. It's 4% right now. It's a little less, but it allows me to throw the money around instantly. So I like to keep a little buffer in here so I don't have to sell the money market and wait the next business day. Oh, and you might realize that this guy changed names. No, I've had a couple videos because I knew there'd be a lot of questions, but I recently made the big move from QQQM to JEPQ. And I did this on December 16th. 2024. And so you can see we're carrying a loss right now. This is a new move, a new position. And I have 1,600 shares, and I'll get into our total later. It'll look different in Seeking Alpha because my wife also has some JEPQ in her brand new Roth IRA that we opened in 2024. IBIT, we still have the 1,050 shares, a total value of $58,758. Our average cost is $36 per share. And you can see we're carrying a $21,000 gain, which is pretty wild because I picked all of this up in 2024 when I moved it over from holding Bitcoin itself. They were all long-term capital gains from my old crypto exchange. And then everything from here down, you can see there still is some QQQM. Oh, I never thought of that. That makes it nice. I don't have to manually separate that anymore. Everything down here is my nephew's, and he's under a year away from getting off my account. So pretty soon we'll have a nice clean 5 positions of mine and mine alone. You can see our total value creeped up to over $1 million, so it was one heck of a year. And oh boy, I'm excited for the HODL Factory update. Now we're out here on M1, and you may notice that we tragically lost VU, the competition. Uh-oh, did I throw in the towel? Did I just say, you know what, enough is enough, I'm done? No, I did not. I moved my tracking out to Snowball Analytics right here, and oh boy, do I love it. You can see here's the value of my individual stocks. There's 25 of them, and they make up the HODL factory for anyone new here. That's just my goofy name I call my individual stocks, and I try to beat the market with it. You know what? I just cut off my own recording. I got a little caught in the sauce. I'm gonna show you all the detailed features when I do my actual HODL factory updates. Let's just skim over what I absolutely love. And just to be clear, I made a spreadsheet and cross-checked this with Portfolio Visualizer, Seeking Alpha, M1 Finance returns, and my spreadsheet to rigorously test the unrealized and realized gains and the dividends. And this thing is spot on accurate. So I'll tell you what it gives us. This is what I wanted all along to try to quote unquote beat the market over the years. This is a portfolio value that shows us as the blue dot. So that's the HODL factory. And you can see I was way ahead, like I used to explain that I was, by about 10% most of the time. And we'll get into that here in a minute. But then just in December, I took a hard crash and the market pulled ahead, and now it's slightly ahead. I made up a little ground recently. But what this shows is if every dollar was put into VU all along, instead of the HODL factory, we would have $155 more. So we're 0.86% behind the market overall. This is the whole time frame. And I can now put us against anything. And I've been using a variety of things, but VU and SCHD are sort of the things that I'm trying to replicate with the HODL factory. I want to roughly compete with or beat the market. And I want to grow and increase dividends and cash flow. And we are crushing SCHD by about 8%. Since inception. And now the last thing we'll show, I don't want to spend too much time here, the portfolio performance. Oh, and I got to hit compare. So this will show us, by the gains that we're used to seeing. And it is based on total profit. So my contributions are a lot of the total value right now because I'm relatively new at this. So this properly dumbs down the returns based on what I've actually profited between the dividends and the gains. So I love the methodology. It reflects reality a lot more than M1 used to with the way that it tracked returns. So you can see here, I had a monstrous lead. We'll just check out, like at this point, I was up 35% to the market's 23, and SCHD at the time's 12.6% returns. If you had this, like in the earlier phases, this is as of March, about a year into this thing. And I kept a big lead, massive lead. Oh my gosh, I'm the next Warren Buffett. 35% to 22. Just crown me now. Oh boy, never mind. And we'll get into the details of this in my HODL factory update, but I've eked it back to where just by return percentage, I'm at 17.82%, again, based on profit percentage. The market has been 18.74%, so I'm within a 1% of it. And then SCHD has been a mere 8.6%. So this will allow us to compare our performance against whatever we want moving forward. And oh man, this nerd is excited. All right, now I'm out on Seeking Alpha, where I aggregate all of our assets and where I run my screeners, the score sheets for the HODL factory, and pretty much do all stock and ETF research. I love Seeking Alpha. And again, I have an affiliate link if you are interested in trying Seeking Alpha Premium for free in the description below. But you can see E-Trade out here, and we won't go over all this because we just did, but one thing I must mention is that you'll notice we have 1,721 shares of JEPQ, and 121 of these shares are in my wife's Roth IRA, which we just created in E-Trade. So we need to do the power of attorney and combine our accounts. So eventually E-Trade will match this again. But everything else here is the same. I'm recording this on the 5th of January. It's a weekend, so nothing changed. Our total value from this will match the spreadsheet we jump into soon. And then my wife's 401k is all in VU, and it's up to 433,000. And then our HSA is all in VUG. It's the best investing option within the health equity one, in my opinion. And it's up to 36.7k. The HODL factories we just saw is at that 18,155. And then cash and cash equivalents. I have a few things in here now, but this is just basically non-VM FXX cash. We're a little high in cash right now as we get ready to to shop for a new SUV family vehicle. All right, we're moving out to our spreadsheet that feeds our portfolio tracker to bring this all together. So these figures will match Seeking Alpha right now because again, it's Sunday and the market's closed. I think it's $1 off due to rounding. This is where we're at. And I just wanted to point out real quick, I don't think I've made it clear yet. I did make a video that released last week or 2 weeks ago at this point for JEPQ versus QQQM. And I do have a video coming out in a week from now on my investing strategy in 2025. And that's the one we're going to really look at the 2024 performance and how we did. And I'll talk a little more about my JEPQ move. I just don't want to cause confusion because I love JEPQ for certain situations and I love QQQM. But for all of you that are thinking buying and holding QQQM is better if you have a decade or more of accumulation left, you're 100% right. Whereas JEPQ might make sense for people that are in or close to retirement that want to raise that floor to make sure that their retirement date doesn't slip away when the market crashes. So there are pros and cons, and I go into more details about that in those other videos. For now, here's our positions though, and it's by symbol and type. So what this does is when we come out to target allocations, here's my holdings for my entire net worth, basically our whole portfolio, and it breaks it into types. So growth, I have VGT, JEPQ, again for me with its growth index. I know it also has guaranteed income, but I kind of look at the PE ratio and the holdings mix, and VUG make up my growth section. And then SCHD is my value and VU is my S&P. And as you guys know, and I talk about more next week, I try to keep these at a third each, and I'm going to work on that this year. Cash is still a little high. We're looking at paying those Roth conversion taxes. I converted 100,000 or so from my traditional IRA to my Roth this year. So that's about $22,000 of taxes plus a new family car soon. Bitcoin has just been chilling, but it's gone from 2.1 to 3.8% of the net worth. This is a buy trigger if it gets below 3%, and it's a sell and take long-term capital gains trigger if it gets above 5%. That's how I treat Bitcoin in my portfolio. And that's IBIT, of course, is the actual holding. And then my stocks is the HODL Factory, and I put $100 a week of my YouTube money into the HODL Factory. Here's where I wanted to spend a little more time in this video than I normally do. I just want to show how wild this stuff is and how well staying the course works. So the first update of 2024, and that's what I kind of use as my year-end 2023. I've always just done that. This is the one I record on some other spreadsheets for like my final value of the year, was $1.19 million, as I mentioned earlier. And then we went on a run, of course, right after I locked that in. But you go all the way up to 1.3 and things are just looking great. And well, they basically just keep going up. 2024 was incredible. We went without me having work income and our only contributions for the most part being the 401k and the HSA. We went all the way up to 1.56 million. I do not expect that to happen every year. We have been blessed the last couple of years, but brace ourselves for the potential of this. I first became a millionaire on 4/1/2022. And man, I was on top of the world until my face hurt from, I don't know, dropping over $150,000 in a matter of a few weeks. You can see that it really slowed down here and then picked up and then slowed down. I mean, we were all over. Here's the weekly change. I record this every Friday, just all over the map. And I didn't sniff a million again until just over a year later. So that could very well happen now. Just don't get too high, don't get too low, and stay balanced, because going all growth or going all value is going to make you look like a hero or a zero. And there's a new flock of haters and a new flock of lovers right around the corner in every market. And on our chart tab here, you can see we have a new bar for 2025. And wow, it's a nice one. It's right behind our highest one for December. And this is the month for this video. These are all the updates are in. This is the average portfolio value was 1.57 million. So it's actually a little higher. And then we dropped down just a touch, but we'll get back up there. But you can see that 2024 was just an incredible year. You go all the way from just above 1.2 to just below 1.6. It was a wild ride. And then one of my favorite things about this spreadsheet, and this is what I alluded to earlier when I said I like to keep these things real time, is I assume an 8% growth, and that is not including inflation. This is a nominal return, not a real return. So this would be around a 5% real return. I'm conservative. This has been over 10% in the last 100 years. But what I do is I take the current value, so it's linked here. All that stuff we just looked at links right back up to here, and that feeds through as the starting value in the projections. So after the crash, this will update, and you always have assumed growth because you gotta plug something in there. But I like to stay flexible. If the market has another year or two like it has the last couple, I might hit my $3 million goal for full retirement in 4 years. 3 years. I mean, it gets crazy. But if we have a lost decade, it might shift way down to here, 18 years, whatever. I don't know. I'm just throwing some stuff out there to see what sticks. But the bottom line is I like to look when I hit 2 million and when I'm projected to hit 3 million. But I just know in my heart of hearts, these are all of my inputs. This is what I put in on a monthly basis. Here's the total, what it currently is. But this is just going to be all over the map inevitably. So instead of banking on stuff in the future, I like to keep my starting assumptions real time so we can always look at where we are and where we project to, but probably will not be in a set amount of years. Okay, now where did all of our money disappear to last month? Portfolio contributions. I have a video dropping next week with my detailed investing plan for 2025. So we'll keep this section short and sweet. All right, this looks a lot crazier than it really is, guys. So out here in December of 2024, we had $104,000 of transactions. My YouTube must have hit it huge and I am just rich. I told you I'd make it. I converted my QQQM to a Roth IRA and then decided to sell it and buy 1,600 shares of JEPQ. And I reinvested HD dividends back into itself, along with dropping a little cash into SCHD as I got a little high in general. So as cool as I want to sound, basically the only new money here is this top line, which is the HODL factory. I dollar cost average $100 a week into that. I think I had a $200 one in there as well, which is why you can ignore the shares, 5 transactions for $600 total. You can see here that JEPQ did cost $58.05 a share. And the SCHD that I picked up, mostly on reinvestments and a few new chunks from the money market, we're at $27.93 a share. It's looking a little high now, but what do you do? Just keep on buying. Really, I've made a couple core changes, no tax implications outside of JEPQ used to be intertaxable because I needed the cash now after quitting my job. My wife and I decided we didn't need that anymore. And of course, I only sold either short-term losses or long-term capital gains when I got out of that JEPQ. So that happened over many months and it was with some patience. But the plan all along was to get that Roth rolling, and I did it. So all of you that have been saying I'm a flip-flopper, the joke's, well, probably still on me, I guess. And now we're off to the best part of the video, my friends. Dividends received. We finally have a full year of dividends to stack up against 2023. I think you're gonna like this. So I knew this was going to be an absolute battle in December because I didn't have JEPQ when I transitioned from the taxable account to the Roth IRA. But as you can see, we got it. We did it. In December of 2024, we had $6,251 of dividends, which was just more than the $6,192 the year before. And you can see for the entire year now, we have $35,260 compared to last year's $21,640. I've mentioned it a million times, but a lot of the dividends in here were from a treasury ladder that I had, so that it was recognized in 2022. So it doesn't give 2023 the full shake because this has been all VMFXX. But still, who cares? Let's just look pretty on paper and pretend like we're smart. But when we drop down December, you can see 0 JEPQ in December. My M1 mix really stepped its game up by paying well over 1.5 times more dividends there. The savings is just the E-Trade, the money I move around. SCHD stepped its game up just a little bit compared to last year with 37.60. Now VGT, I scaled down my shares because ultimately this turned into JEPQ. So it went from VGT to QQQM to JEPQ. So I only have 500 shares of VGT compared to 600 and something, but it did increase its dividends by a decent amount per share. This is technically my wife's holding for the HSA. I use VUG for tracking. It's identical, but it paid 46.56. So it stepped its game up a little bit. VMFXX, that's what I'm saying. Last year I had some rotating treasuries, but we had 485, crushing the 12. The SP 500 is my wife's VU, essentially, from her 401k, and it was $13.75 compared to $12.96. And then I have some cash other that's earning interest, and it was exactly $150. This isn't just an approximation, it's reality. And ultimately, it gets you to just more dividends this year. Adding JEPQ back in the mix has me feeling good for 2025, which I'll be adding right here. Now to the section that didn't do as well as we had hoped. Portfolio performance. Let's see how this thing held up in 2024. All right, this is going to be the last month where I used the profile of a third each that I used to build my wealth legitimately versus the market versus VT. And we're out here on Portfolio Visualizer to do this back test. You can see here a third each is my portfolio, 100% VU is portfolio 2, and 100% VT, the world stock market, is portfolio 3. Oh, and I should show we're looking from 2012 to 2025. Oh, it's kind of cool to have a new year. I love that. Year to date included, yes. And then I put in the same assumptions. This just roughly mimics my journey, starting with 80K, because I started back in 2010. I can't go back further because of SCHD's limitations, but 80K maybe, 2,000 a month put in there. And again, I just put in stuff to roughly mimic my ending balance. You can see dividends are reinvested and we're going to display income. So when we hit analyze, we have from January 1st, 2012 to January 3rd, 2025. I just love having 25 now in action. This is the first time since I've done one of these. Now out here on the portfolio summary, we can see that my mix here ended up with the 1.537, which I figure was close enough to my portfolio value. Had everything gone in VU instead, we'd be at 1.324. And then VT would be at 915,000. And we'll get into more of the return information down below, but you can see most of these are pretty similar, if not favorable for mine, like best year, worst year, some of the drawdowns, the risk-adjusted returns with these ratios. It's a pretty good mix of value and growth. Now on the year by year, and we'll get into the month, don't worry, we'll see how December shook out. Our portfolio down here is the blue one. And I don't know why it's not called my mix. I don't know why I use this long name this time. The green is VU and the gray is VT. After 10 years of wins in a row, it did fall short in 2024 by a decent margin. So the market just kind of kicked some butt. I'm not gonna lie. 25% returns for the market and only 21.67% for the mix. And then VT lagged, as always, 16.49. Oh, and then 25, I love it. Yes, we're ahead. I'm a genius. Everything is restored. No, I'm just playing. We just have a couple days here in 2025 so far. But on those trailing returns, over the full duration, that 16.25 helps compound some serious wealth, as you saw above, compared to a very ridiculously high 14.71. And then the world market has been at 10.45. I mean, almost 15% for something that averages 10% or so over the last 100 years. We have all been so blessed lately. And then the 10-year shows a similar story, just a little smaller numbers, 15.2 compared to 13.07 of the market. The 5-year, 16.2 versus 14.5. And then the 3-year, we fell short by 0.04% of the market. And then of course, as we just saw, the 1-year kicked butt on the market and we fell short there. And the 3-month, we fell short as well. Okay, going back to VU, it's over. We don't always look at this one, but the portfolio income works out nicely especially with the 50-50 mix of VGT and SCHD, which I show in some other videos. And this one I use VU because I've actually held VU and I don't want to exaggerate. But you can see even with VU weighing it down, because of course VU would match the green bar, you get some good cash flow going and it grows at a pretty nice rate with SCHD and VGT both being low-key growers. By the time 2024 hits in this scenario, you're sitting at 21.5K per year compared to 16,000 of the market. All right, so we're probably like 48 minutes into this video, and I'm now getting to the point. Here in December, which is the month we're assessing, it looks like our mix fell short of both the market and the world market. We had a negative 3.14% return compared to negative 2.34 for the market and 2.94 for the world market. You can see that VGT helped us within the mix, but SCHD was a big drag with the energy just really struggling, negative 7.5%. You average it all out and you get that 3.14. Pretty rough one. I have a few different videos that show how my favorite mix of SCHD and VGT have stacked up against VU and VT over the years. And I'll continue making an annual update for that series. But in my future monthly portfolio updates, I'm going to keep the focus more on my specific holdings against the market, against VU, for that time duration. Looking ahead, I wanted to send out a huge thank you to each and every one of you for your support during my first full year on YouTube. It's been a blast growing with this community, and I hope these videos have helped you on your personal journey towards financial freedom, because that is why I'm here. Speaking for myself, I learned a ton in 2024, and I'm more pumped for 2025 than I've ever been for a single year. I can't wait to continue our journey together, and we're going to crush this simple game. Check out one of these two videos to continue down your path towards financial freedom. Remember, money is overrated. Freedom is not. Thanks for watching, and I will see you here in the next one. Bye.